So I think a downturn in the stock market will not hurt gold and silver. It will help them. I think there's a point at which the gold and silver move will advance so aggressively that...
You're watching Silver News Daily. Subscribe for more.
Michael Oliver just made a shocking prediction that could change everything we thought we knew about silver. He says we're on the brink of a massive silver rally, but here's the twist. It comes right as silver prices dip following Trump's recent win. This isn't just another silver spike. Oliver believes we're about to witness something unprecedented. So what's driving his bold prediction? Stay tuned, because this could be the opportunity that every silver investor has been waiting for.
Many indices. So I think we're making a top. I do not trust this rally. I think it looks exhaustive. And therefore, I would be highly spooked if I were a bull. If we drop back, and I'll just say this, you don't want to see the NASDAQ 100 back down around 2,000 again. It got up to 2180 today. Okay. The July high was, I think, 20,675. So we took it out by like 0.5%. You don't want to go back down and visit the price lows we just saw a week ago. If you do, I think it's over. So that's our opinion of the stock market. And obviously, we've always argued that, especially in this environment, with the asset class movements and money flow from one to another, that when this market breaks, biggest bubble in U.S. history, it's going to ripple into it's going to have wave effects in other markets. And it's especially going to upset the central banks. I don't just mean the Fed, but Europe, Japan, so forth. They're all tied together. Okay. And they're all don't want their markets to break down. We're the one in particular that should be watched because we're the biggest bubble. When that happens, I think you'll see a brief flush of money out of the stock market into the T-bond market, which, since the Fed rate cut back in September has gone the opposite direction of the stock market. Whereas yields have risen, bonds have dropped in price, stock market's gone up. Now the stock market, I think, is trying to peter out, and the bond market is trying to carve out a low. And if you see it start to move up like about a point above where you're trading right now on the T-bond futures, it's saying, well, I'm coming up out of the hole. Well, why would that occur? Possibly because money is starting to move out, doubting money, early money is starting to move out of the stock market into what is perceived to be a possibly safer place. And I think the monetary metals will be a large beneficiary of a major downturn in the U.S. stock market.
Just recently, we've seen both gold and silver catching investors' eyes, especially with gold hitting record highs over $2,600 an ounce. But here's the thing. Silver has been on a similar upward trend, reaching $32 per ounce, yet is still taking a dip right after Trump's election win. Now, you might wonder, why this sudden drop for silver when gold seems to be holding strong? This temporary dip could be the calm before an explosive rally, a moment that experts say could offer a unique buying opportunity. So, if you're wondering what might be next for silver, let's dive into the latest market trends driving this unexpected setup.
Highly likely to occur. This rally looks like it could be exhaustive, newsy, and that's not the kind of thing you want in an old bull trend that's already showing signs of exhaustion, that's already by various metrics, including fundamental type, that these new highs aren't confirming. There's too many things that are wrong. And our metrics, that's what we see. So we do not trust the rally. Now, we're measuring, especially the NASDAQ 100, because it's been the leadership index for the last 15 years. It's gained more than twice as much as the S&P. And it's front-end loaded with the name stocks, NVIDIA, Amazon, Apple, et cetera, et cetera. As it goes, the market will go to varying extents, but it's been up more than others. When it goes down, it'll go down more than others. When we measure it, we measure on a shorter term level, like weekly momentum. How is price doing versus its 3-week average? We create an oscillator, and it often looks different from price. We run it versus its 3-month average, 3-quarter average, et cetera. And we're looking at different time scales of its trend. I've never seen before, and this is, I'm serious when I say this, going back decades, I've never seen before the configuration of breakage levels on momentum that are so tightly clustered together Normally in any inhale-exhale market, as you're moving up or down, you can break something short-term and create some kind of counter-trend move, and it doesn't alter the big trend. But right now, we have a situation where, we've already damaged weekly, but the monthly momentum literally just below the lows we saw last week will blow major support structure. And about 1% or 2% below there, I'm going to blow major quarterly momentum structure. So when we look at it from our vantage point, not just the simple price chart, which everybody looks at, we don't see glory on the upside. We see lower and lower highs. In other words, the NASDAQ made a high back in July in price. Okay, it took it all these months up until yesterday to finally take out that high. So with 5 more months of labor just to get back and nip it out. Momentum isn't making a new high at all. It's a much lower high. And this is going on with many sectors.
Let's talk about what makes silver such an intriguing and sometimes unpredictable asset. Unlike gold, which has long been the go-to for stability, silver has a dual role that sets it apart. It's both a precious metal, like gold, but also a critical industrial metal. That dual identity makes silver more volatile and reactive to a wide range of market forces, from currency fluctuations to industrial demand in sectors like electronics and solar energy. This means that while gold tends to hold steady or rise during economic uncertainty, silver can experience wild price swings that at times offer investors opportunities for enormous returns. Here's what's interesting. In the wake of Trump's win, some analysts think silver's industrial demand could skyrocket. Industries that rely heavily on silver are expected to grow, with Trump's promises to boost domestic production, bring manufacturing jobs back, and invest in infrastructure. And unlike gold, which is primarily valued as a store of wealth, silver's industrial demand makes it more responsive to economic expansion, especially when that expansion is driven by policy shifts in major markets. This is where Michael Oliver's bold prediction starts to make sense. If Trump follows through on plans to support industries that use silver, we could see demand spike, and with it, a sharp rise in silver prices. That's the nature of silver's dual role. It's a hedge like gold, but one with a serious potential for upside during economic growth. And right now, Oliver and other experts believe we're seeing just the kind of setup that could trigger an unexpected silver surge.
We've had, after the 3 years of lethargic action by gold, where it was caught in a 20% range, that's all, 20%, max high to max low. In fact, most of it was a 15% range between mid-2020 and early 2024. Silver and the miners staircase down gradually while gold went sideways. But once we emerged in March, the tone of the market changed, and of course, gold shot up nicely. Silver went from our breakout level was between 25 and 26 on momentum, and we shot up to 35. But in that process, you'll notice they continue to have these repeated sell-offs. Sometimes they last several months, April to May, June, July. In gold, for example, where it went sideways, silver corrected down, or several weeks, or recently just a very bad week. Now, there's a point at which this bull market will prove to the doubters, who apparently are constant out there. In fact, I've never seen such doubt as we've just had with the recent drop. I think everybody who's been a doubter has jumped on board. That was it. It's all over. One of the assumptions there is if the stock market goes down, gold and silver go down. Well, the stock market just went up big, gold, silver went down. Okay, fit that into your logic, okay, if you believe that. So, our argument is if the stock market goes down, it will further fuel the central banks into what they do best, which it will quickly refuel gold. Not that it needs refueling because it's ahead of events. It knows what's coming. So I think a downturn in the stock market will not hurt gold and silver. It will help them. Just the opposite of what's happened in the last 72 hours. So the recent drop did not break anything on even intermediate momentum, long-term momentum. Nothing was broken or even jeopardized. Whereas everybody screamed, that's it. I don't know what they're going to say when we go back to 2,800 gold and silver goes back up to the mid-30s again, 35 or so. When are they going to shut up? I think there's a point at which the gold and silver move will advance so aggressively that it will take breath away. Meaning, if you go back to 35 and gold goes back to 2,800, and people say, well, golly gee, we were wrong again. It's not the top. There'll be a point at which you won't just go up another couple $100 in gold or another $2, $3 in silver and then have another of these processes. You'll launch in some way that just takes breath away. Anyway, that's our view.
Let's take a step back and look at how past U.S. elections, especially Trump's previous term, impacted silver and other precious metals. Historically, silver has shown a tendency to react significantly to political shifts, especially when they bring economic uncertainty or changes in trade policies. For instance, during Trump's first presidency, silver experienced substantial volatility. This was largely due to the administration's strong stance on tariffs and trade, which created a climate of uncertainty that drove up demand for safe haven assets like silver and gold. Looking back to the 2016 election, when Trump was first elected, silver initially saw a price decline as market optimism favored equities over metals. However, as his trade policies took effect, silver began to climb, reaching almost $20 an ounce in 2019. This pattern of a short-term dip followed by a steady rise reflects how sensitive silver can be to policy changes and economic uncertainty, two factors that could be in play once again with Trump back in office. Moreover, experts point out that silver tends to perform well during periods of economic unpredictability, a recurring theme after major elections. With each new administration come shifts in fiscal and monetary policy, often leading to inflationary pressures or changes in currency values. These conditions favor silver as it not only serves as a safe haven asset, but also benefits from its industrial demand, which can be influenced by economic policies. As we move into Trump's next term, it's reasonable to expect that silver could follow a similar trajectory, reacting to both the immediate market responses and longer-term economic policies his administration might pursue.
Institutional control over our lives, economic controls, regulatory controls. Even if you move to dismantle that and to lessen taxes, for example, which is, let's say, a good direction, okay, you've still got a monster that's going to break because you've got errors that have been compounded over not just the past 15 years of stock market bubble, but decades of built-in systematic errors and pain that's been hidden that will be unleashed when the errors are exposed. So it's not like you can go in and simply stop that. That's probably going to have to pay dues, all those compounded errors of decades, and especially the last 15 years where money was free. That creates massive mistakes on the parts of individuals, families, corporations, etc. And when those dues have to be paid and we expose it, I think the stock market is like the big needle. When you punch a hole in it, all these other errors will be exposed. All the data points you want to look at that look, okay, they'll suddenly won't look okay. They'll go dark quickly. That's been the history of data points anyway. So even if he's on a correct path and people behind him in Congress and so forth and in his administration might be moving in a correct direction, they got a monster that's going to collapse on them. And unfortunately for them, they'll probably be blamed for it. If the stock market gets down real hard during his administration, they'll say, well, Trump did it. No, it's the history, the buildup of these errors that finally has to unleash. And so the assumption by Trumpers who may have bought the market, the last few days aggressively, while it's a lovely thought and maybe we're headed in the right trajectory, there's too many big bad things that are likely to have to come first, not joy. And therefore, they've made a mistake. And we shall see. But our technicals argue, do not trust this. If it sneezes, it's going to cough and it's going to go down.
Let's dive into Trump's economic policies and the possible effects they could have on the precious metals market. Historically, Trump's America First stance emphasized boosting domestic production, implementing strict tariffs, and reducing reliance on international trade. These policies were designed to protect U.S. industries, but often created ripple effects across global markets, impacting everything from the value of the US dollar to the cost of raw materials. This protectionist approach tends to lead to increased inflation, as tariffs on imported goods often raise prices domestically, and a stronger push for domestic production increases demand for raw materials, including metals like silver. One of the biggest factors to watch is how Trump's policies could influence inflation and the dollar's value. When inflation rises or the dollar weakens, investors typically turn to assets like gold and silver to protect their wealth from currency devaluation. During Trump's previous term, inflation began to climb as trade tensions escalated and tariffs took effect. The same policies in his new term could create a similar inflationary environment, with the U.S. dollar experiencing pressure as international trade dynamics shift. Silver, often considered a hedge against inflation, could see a significant boost as investors look for alternatives to cash and other devalued assets. Moreover, Trump's stance on energy and manufacturing is likely to impact silver's industrial demand. He has frequently advocated for ramping up domestic manufacturing and infrastructure projects, which would likely increase the demand for silver in sectors like electronics, solar energy, and automotive manufacturing. As these industries grow, the demand for silver as a raw material is likely to intensify, further supporting Michael Oliver's prediction of a potential silver rally. Essentially, Trump's policies lead to heightened inflation and increased industrial demand. Silver could be positioned perfectly to benefit from both sides of its unique dual role as a hedge and a critical industrial metal.
Trump is an expression, I think, of not only emotion against what's been going on, but intellectual policy shift. But let's put it this way, he's not an intellectual, but he's sort of got an idea of what's wrong, okay? But he's got many ideas that possibly you can argue don't fit with the real free market perspective. And as you said, in his administration, the debt rose and so forth, and he wanted the Fed to cut rates to zero, et cetera, et cetera. There are many people, though, in his administration that are emerging, we know, that are got their heads screwed on pretty good. So there's going to be a lot of good policy. Let's give it that. But it's going to be mixed. I mean, tariffs is, I'm glad they're going to cut my income tax. And frankly, if you break the stock market, don't count on having to pay taxes next year. Because if the IRS can't collect taxes because of dysfunctionality, too many people can't file, don't file, have to file for delay because they're hurting. Too bad. You take 20% off their IRAs and so forth. The pain's going to hit them from the other side. It was hitting them on the consumer side. Now all of a sudden their sense of safety diminishes. It wouldn't shock me that he has to revert to sales tax or definitely the tariffs. But again, even if you think he's a hero and his policies are headed in the right direction, you've got to realize that there's been decade after decade. I don't just mean 4 years of Biden, okay? Biden didn't do anything to cause inflation, really. Government spending, but they all do that decade after decade. The president does. Congress does. It's the Fed that really did that. They're the ones that pumped money into the system, gave us free money for 10 of the last 15 years. Fed funds rate effectively zero. So, but that's been that process of rising.
Now, let's take a closer look at what the experts are saying about silver's potential in the current market. Michael Oliver's prediction is just one of several bold forecasts, suggesting silver could be on the verge of something big. According to UBS analysts, silver is currently undervalued compared to gold, and they believe it has significant room to grow. Historically, when the gold-to-silver ratio was as wide as it is now, currently over 84:1, it tends to narrow dramatically. To put this in perspective, the ratio usually hovers between 40:1 and 60:1, meaning silver has a long history of playing catch-up to gold during major rallies. This isn't just theory. We've seen this play out in past markets. In 2011, for example, silver surged to nearly $1.50 an ounce when the gold-to-silver ratio dropped to 30:1. And in 1979, during another period of high inflation and economic uncertainty, that ratio dropped below 20:1. Analysts at UBS are looking at these historical trends and suggesting that we could see the ratio fall back into the 60s over the next 12 months. If that happens, it would mean a substantial rally for silver, even as gold prices remain high. But it's not just about ratios and numbers. Many experts argue that silver is fundamentally undervalued as an asset. It's more affordable than gold, which makes it attractive to a broader range of investors. And with Trump's pro-industry policies likely to drive up demand for metals with industrial applications, silver could see even greater upward pressure. Michael Oliver's forecast might sound bold, but with both historical patterns and industrial demand factors lining up, he's not alone in thinking that silver's next big rally could be just around the corner.
They got a big goose the other day. Bank sector went up very large on the Trump rally. Again, the banks will go with the market, and whether they lead it on the downside, I suspect not. But all the sectors of the market will go down with the market. Watch NASDAQ 100. The S&P is closely, by the way, our trigger levels for NASDAQ that tell us, okay, we've really started. And I've roughly defined it as don't go down to the lows we saw a couple weeks ago, a week and a half ago. S&P has numbers down there too. So S&P doesn't have to go a lot further to trigger its stuff. So when it goes, all the sectors will go too. And no doubt there will probably be, in the banking sector, a symbol here or there that will get a headline. And of course, all it takes is like one. I don't mean some tiny little bank, but some regional or medium-sized bank that has a headline and people say, oh my gosh. But the real bubble is in, of course, the tech arena. And I'm not saying that the tech arena is unjustified in the bullish outlook of how it's going to change our lives, no more than .com did. .com bubble broke and dropped 82%, NASDAQ 100, between 2000 and 2002. But all the notions we had of how it's going to positively change our lives were quite valid. In fact, over the subsequent decades, we've learned it was even more valid. It really did change our lives in a good way. And so I can't argue that AI is invalid. It's just that it's overpriced. So even if it's as valid as people say, it's still a bubble. And, you could have a major regurgitation. And as it goes, so will the broad market. And also there's some other indices overseas that very much resemble ours. Not Europe. Europe is not a bubble. China is certainly not a bubble. They're not even double the price they were in 2009. But Nikkei in Japan, again, monetary policy helped create that one. And the Sensex in India both look like bubble-type markets that are very much in sync with us in terms of how much do they have to drop to blow their structures. I'm not talking price, but momentum structures. They're pretty much in sync. So this U.S. drop would not be isolated. Hence, the central banks of the world will go berserk.
Now, let's take a closer look at what the experts are saying about silver's potential in the current market. Michael Oliver's prediction is just one of several bold forecasts suggesting silver could be on the verge of something big. According to UBS analysts, silver is currently undervalued compared to gold, and they believe it has significant room to grow. Historically, when the gold-to-silver ratio is as wide as it is now, currently over 84:1, it tends to narrow dramatically. To put this in perspective, the ratio usually hovers between 40:1 and 60:1, meaning silver has a long history of playing catch-up to gold during major rallies. This isn't just theory. We've seen this play out in past markets. In 2011, for example, silver surged to nearly $1.50 an ounce when the gold-to-silver ratio dropped to 30:1. And in 1979, during another period of high inflation and economic uncertainty, that ratio dropped below 20:1. Analysts at UBS are looking at these historical trends and suggesting that we could see the ratio fall back into the 60s over the next 12 months. If that happens, it would mean a substantial rally for silver, even as gold prices remain high. But it's not just about ratios and numbers. Many experts argue that silver is fundamentally undervalued as an asset. It's more affordable than gold, which makes it attractive to a broader range of investors. And with Trump's pro-industry policies likely to drive up demand for metals with industrial applications, silver could see even greater upward pressure. Michael Oliver's forecast might sound bold, but with both historical patterns and industrial demand factors lining up, he's not alone in thinking that silver's next big rally could be just around the corner.
I don't know that you need a cat. I think it'll be technical only. In other words, and then you find the explanations later. Usually that's the way it is. It's usually rarely a dark cloud comes over and says, instead the market breaks sharply and people say, what happened? And then all of a sudden the data points start to change. The underlying data points that are already not really good anyway, but the Fed likes to say how good the economy is. So the stock market is the leader. Watch it right now, because when it goes, that will provide one further impetus for gold. And temporarily, and I say temporarily because I'm not a friend of long-term U.S. government debt. There's a lot of major analysts, including one from Bank of America a couple of weeks ago, said, do not buy U.S. Treasury bonds. Okay. This is a chorus from very wise people. Many analysts that I respected aren't technicians. But the technical situation in bonds looks like you could actually get a spike on the upside for a couple months maybe, where if money moves out of the stock market in a somewhat surprise process, not really, but to many people, money will flow into T-bonds for a while. The main beneficiary ongoing will be gold and silver. But right now, I think you've got to watch the stock market very closely. And as I said, as far as technical triggers, I won't get specific. We give that to our subscribers. But generally speaking, you don't want to go back down to where we were a week or two ago in price. That's only several percent below you. So if you do that, something's wrong. And it likely will be exposed fairly quickly. And I don't mean a crash, but I mean you could have a 10 or 15% jolt very quickly. And then a pause, and then another, et cetera, over a span of several quarters, you could drop 20, 30%. I'm not looking for a crash up front. It's always possible, but I suspect not. I suspect it's in double-digit jolts. And during that process, I think gold and silver will be perceived, and many analysts do now. They realize, it's beating the stock market. In fact, it's been beating the stock market for a couple of years. If you go back and look at the spread low of gold versus the S&P, a couple of years ago, gold has appreciated quite rapidly from that low, and a significant percent. And year to date, gold's up like 30 some odd percent. Okay, and the S&P is up like 18 or 19. So, and silver, by the way, is up more than gold. At least it was a few weeks ago, year to date. So asset managers are noticing that. And so when that stock market wobbles, it's going to spook movement of money.
Now, let's examine another key factor that could drive silver's rally: global tensions and the demand for safe haven assets. When geopolitical uncertainties are on the rise, investors typically flock to assets that offer stability and protection, like precious metals. Silver, though often overshadowed by gold, has a long history as a safe haven investment in times of economic turmoil. And with Trump's return to the White House, experts predict that international trade dynamics to become increasingly strained, especially between the U.S. and China. Trump's previous administration imposed tariffs on several Chinese goods, escalating tensions that rattled global markets and sent investors scrambling for safe assets. If Trump renews these policies, silver could benefit both from increased industrial demand and as a hedge against economic instability. But the story doesn't stop there. Beyond trade tensions, there are other ongoing geopolitical issues, from Middle Eastern conflicts to the strained relations between Russia and Western nations. These tensions create a climate of uncertainty that tends to boost investor interest in metals like silver. UBS analysts have pointed out that silver could outperform gold in the coming months, partly because of this geopolitical backdrop. And as central banks worldwide increasingly diversify their reserves, many are turning to precious metals as protection against currency risks. Silver, with its affordability and dual-purpose appeal, stands out as an ideal choice. So while gold may remain the top safe haven asset, silver is positioning itself as a strong contender, especially as nations and investors seek alternatives to traditional currencies.
Maybe I've been wrong on that. The University of Virginia Department of Politics suggested in a poll a year ago that there's good odds that you're going to have upset, of the kind you're talking about. And, well, he's not in office yet, I mean, if they go to the streets of Washington and have a riot, well, the Democrats are in power there right now. Okay. It doesn't shift for, a couple more months. So it would be kind of inappropriate to do it right now because Trump's down in Florida, So I don't know whether that's going to happen or not. But clearly I do suspect that from a political party perspective, that the upheaval in the Democratic Party will be quite major, where the radical left of that party is really PO'd. And they've already expressed that. Bernie Sanders has said, we've abandoned the working class, therefore we lost this. We need to become a workers' party. Okay. And Ocasio-Cortez. And so the people like that will no doubt ascend into party ranks. Or the party will totally split between, the extreme left and what they view as the now out of power forever moderates and Democrat Party. So that's going to be an interesting process. But as far as the social unrest, I suspect that what helps generate that kind of thing is also pain, economic pain. And, a stock market downturn will inject that into society because it always does. It did in 2008 and 9, even if you weren't even in the stock market. You got laid off. And this is the biggest bubble in U.S. history. Bigger than 29, bigger than 2000, bigger than 2007. So there will be associated pain. And whether it's politically linked, we'll see.
Now, let's look at the technical indicators supporting the possibility of a sharp rally in silver prices. One of the key metrics experts are watching is the gold-to-silver ratio, which currently sits at a historically high level of over 84:1. This ratio shows how many ounces of silver it takes to equal the value of 1 ounce of gold, and when it's unusually high, it often signals that silver is undervalued relative to gold. In the past, wide gaps like this have narrowed sharply, resulting in significant price increases for silver as it catches up to gold. But there's more than just the gold-to-silver ratio. Analysts also point to strong support levels for silver in the $1.30 range, which has held firm even through recent market fluctuations. If silver prices dip slightly below this support level, some traders are viewing it as a prime buying opportunity. On the resistance side, a breakout past $1.33 could trigger a bullish run, as this level has previously acted as a barrier for silver's upward momentum. Some experts believe that if silver breaks through this resistance, it could climb to $1.40 or higher, aligning perfectly with Michael Oliver's prediction of a rally. Additionally, we're seeing a pattern known as the cup and handle forming on the silver charts. This technical formation often precedes an uptrend and is associated with bullish sentiment. Historically, when silver charts show this pattern, it's been a precursor to a substantial price movement. So, we're not just looking at predictions here. We're seeing tangible, data-driven signals that support the idea of a silver surge. If these indicators align with the economic and industrial factors we've discussed, we could be on the verge of a historic rally in silver. So, after examining all these factors, it's clear why Michael Oliver's prediction of a massive silver rally might not be as far-fetched as it seems. With Trump back in office, we're likely to see a return to policies that boost domestic production, increase tariffs, and potentially escalate trade tensions. Each of these actions could have ripple effects on the economy, causing both inflationary pressures and heightened demand for safe haven assets, two conditions that historically drive silver prices higher. Adding to this is the unique position silver holds. Not only is it a precious metal like gold, providing stability during times of uncertainty, but it's also an essential industrial metal. With booming sectors like renewable energy and electronics, demand for silver could rise dramatically. And remember, we're already in the third year of a silver supply deficit, meaning there's simply not enough new silver coming out of the ground to meet this potential surge in demand. From technical patterns to global trends, everything seems to be pointing toward a perfect setup for silver. If the gold-to-silver ratio begins to tighten, silver could see dramatic gains in a short period. This might just be one of those rare moments when economic policy, Market fundamentals and technical indicators all align to create an explosive rally. So while this isn't financial advice, it may be worth taking a serious look at silver if you're considering ways to protect your wealth or capitalize on this unique market moment. And don't forget to subscribe for more insights on precious metals and market trends. We'll keep you informed every step of the way.